Hi traders! We often get asked how to use order flow indicators for swing trading or higher timeframes. So today, we'll walk through a quick example from yesterday. Before we start, remember, we're not selling courses or teaching strategies. We're only showing one way to use the free order flow indicators we offer. You should always use these tools inside your own strategy. At the end of the video, I will also tell you how to get these tools completely free. The Hameral order flow. Basic pack includes volume profile, VWAP, delta bars, footprint, and super oscillator. Even though most swing and higher timeframe strategies rely heavily on weekly, monthly levels and market context, we'll show you how to use these exact indicators to hunt for high probability trades. Let's look at yesterday's price action together. We start by marking the key areas using the volume profile, then adding confluence with the previous VWAP and its standard deviations. More confluence means stronger levels. Price opened far above the previous day's VAH, so we look for the most recent volume profile levels around current price. We draw an area connecting the two VAH with the recent swing high. Next, we highlight the previous day's full volume profile. This is the most important one. We create an area connecting the most recent VAL with the POC from 2 days ago, which also lines up with the previous +1 VWAP deviation. And the final key area is the previous VAL, which has confluence with the previous -1 VWAP deviation and the recent low. Now we have our structural zones. Right after RTH open, price moved into our key area. Even though we were in a bullish context above VAH and VWAP, openings far above VAH often create retracements, especially when they hit stacked confluence. Price rejected the +2 VWAP deviation, and delta bars showed strong selling pressure. Now let's check the footprint. Because this is a 30-minute footprint, and candles are too large to see every price level, we group the orders into 15-tick rows for better visibility. At the top of the candle, the delta histogram shows a lot of aggressive buy orders that fail to push price higher. This means buyers are hitting the market, but getting absorbed by sellers. Next, delta flips from strongly positive to deeply negative. Minus 3,500 bid, then minus 3,300 bid. The best entry appears right when the 30-minute candle closes below VWAP, switching the context to bearish. Buyers were clearly absorbed at the top. Delta turns heavily negative. Price closes below the POC on the footprint. And we also see a super oscillator divergence. Price makes a higher high. Oscillator makes a lower high below the 80 overbought zone, showing buyer weakness. Risk to reward 1 to 2 toward the next key area. Price continued lower for the entire session. We also had a second clean setup at the previous VAL, a break, retest, double rejection at the -1 VWAP deviation, and continuation down. Another easy 1 to 2 trade. What we showed today is a simple but solid approach. A more advanced swing trading method uses higher time frame tools like weekly volume profile, weekly VWAP, delta profile, and more. These give even stronger swing levels and context. All of these are included in the Order Flow Pro Pack. You can find details are in the description. How to get the basic pack for free. It's very easy. Download and install the Hameral Order Flow Basic Pack from our website. You have the link in the description. If you enjoyed this video and want more breakdowns like this, let us know in the comments. Cheers.